The market heat is fading fast. Is a chill settling in for investors? It's been a rollercoaster week for markets. The rally that was driven by hopes of Fed cuts and AI-fueled growth is losing steam. Hopes for the end to the US government shutdown have faded too, with officials digging in for another week of gridlock. And in the UK, the Bank of England's darkened outlook is raising the stakes for the autumn budget. So, after months of market optimism, is winter finally here? Vicky Pryce is Chief Economic Advisor to the CEBR. So, Vicky, there is a lot of froth in the AI space. Should we expect further correction in companies that are betting big and spending trillions?
Well, it'll be interesting to see what some of the earnings figures tell us, but there seems to have been some concern about the whole thing perhaps have been overvalued. Loads of people now are rethinking what those values are, but of course we've been through phases like that before, and yes, we've seen ups and downs, but overall it's been on the up. So it could just be a momentary concern, fueled maybe by all these other issues that are around, maybe the government shutdown, maybe what's going on in other markets. But I'm suspecting that there is some rethinking going on. It may not materialize in terms of leading to a permanent sort of re-evaluation downwards in the very short term, but it may well happen over the next year or so. I think that's what most people are expecting. And if that is the case, then you're going to be a bit more cautious in the short term.
Well, let's talk about the shutdown, and it's reportedly costing the US economy around $15 billion a week. With no end in sight, can that damage be recovered?
When you're looking at what's going on in the markets, obviously the shutdown is quite important, but it's particularly important because at the same time as, of course, affecting the economy directly, it also means that some of the data that we want to be looking at to see, perhaps what's happening underneath it all, and also what the decisions of the Fed may be next month. Those do not really come out during the period of a shutdown, and you have to rely on quite a lot of sort of private data and other surveys that are being done, which perhaps are a little bit less reliable, maybe not. It all depends. If you look at the UK, we're beginning to think that perhaps the official data is less dependable than perhaps some of the survey data is telling us, but never mind, hopefully that will be sorted out. But we're seeing, for example, quite good latest job data coming out in the US from ADP, for example. And that's good news. But then you wonder, if the Bureau of Labor Statistics data were to come out as well, would it actually say the same thing? So people are cautious.
Well, with that strong ADP number this week, does that make a Fed rate cut in December even less likely now?
Well, that is really the issue. Will they trust that? I mean, I looked at a study which compared the two. The Bureau of Labor Statistics data and the ADP one. There are some slight differences, but if you look at the graph in terms of the sort of trend, they seem to be quite aligned. So I'm suspecting that, yes, perhaps they will look at that, and the cautiousness, if you like, of the Fed perhaps is justified. They're just waiting to see what will happen. So the likelihood of a December one, if indeed we are convinced that perhaps after a drop in employment in the previous 2 months, things are changing, then perhaps the Fed will be a bit more cautious in terms of what they do next.
Across to the other side of the Atlantic now, and the Bank of England held rates at 4% in a tight vote. Is a Christmas cut now looking inevitable, and will the budget strengthen their confidence to go further?
We didn't see a move, I'm afraid, in the Bank of England decision. They stayed at 4%. So everything sort of moved up a little bit since. Does this mean they fear higher inflation? They are concerned about whether inflation, in fact, is tamed the way that perhaps the ECB thinks they have done, the European Central Bank. So huge uncertainty as a result of that. What will the Bank of England do next? They're going to wait, I think, for the budget of November 26, decide whether indeed it means or what it means for inflation and what it may mean for growth as well, and make up their mind, and hopefully for the economy as a whole cut rates in December.
So finally, Vicky, there was some good news though for some. Tesla shareholders approved a $1 trillion pay package for Elon Musk. Will this be enough to revive its flagging core business?
When you look at what he's got to do to get that package, it's quite a lot. And if you read the commentary afterwards, one of the concerns was that a lot of what he was supposed to be doing was in the robots territory. At least that's what he seems to think he wants to do, whether it was actually in the cars themselves. So there is a concern of perhaps about where the focus will be, but it's tantalizing. I was just thinking how many times Greek GDP, that package is coming from Greece. It's quite stunning, really.
That was Vicky Pryce from the CEBR. Don't forget, you can watch more videos on Reuters.com.